Here we go, guys. Welcome back. Thanks again for being a part of the team here at Not Your Father's Capital. Now, what I want to talk to you about in this video is Bitcoin dominance, all right? Because despite the changing market conditions, we are seeing Bitcoin dominance surge, and I'm going to break it to you guys what this means for the regulatory crackdown we are seeing and the market dynamics moving forward. So if you're new to the channel, please consider subscribing here at Not Your Father's Capital. Smash that like button, follow us on Twitter, all that good stuff, and let's get down into it, all right? So I'm going to break down some of the key takeaways to get started, but first, this is not financial advice, so do your own homework and your due diligence with all things crypto and financial. But furthermore, I'm going to talk about these takeaways because we have seen basically the Bitcoin dominance increase. Now, Bitcoin dominance measures the ratio of the Bitcoin market cap to the cumulative cryptocurrency sector market cap. All right, so basically the ratio of Bitcoin dominance. It kind of speaks for itself, right? And right now it's at 58%. So that's 58% Bitcoin is dominating the total crypto market cap. Now, what we've seen is essentially these market dynamics changing, right? Regulation is increasing, inflation is increasing, and now we've seen is the market still struggling in this bear market because of everybody's monetary policy. Now, crackdown of regulation has increased. We've had securities being named as tokens, and Bitcoin is certainly creating its own window of opportunity because it has simply been immune from the SEC's microscope. It is truly decentralized, right? It's kind of the model that I think the SEC is looking at and using in their determinations in terms of the crypto, the digital asset sphere, when you talk about what is a security versus commodity, all right? So they're kind of throwing the Howey test out of the window on that one, and just I think kind of just looking at Bitcoin's model and saying, do you either fit the bill or do you not, all right? So that's good for all the Bitcoin maxis out there. So everyone wants to talk about what Bitcoin is going to do further, but guys, we're up above that 30K level, all right? So it's just hovering. It's not really doing anything, but it has risen, right? We're seeing the ETF spot trading coming back into light. We're seeing a lot of financial institutions, financial players on more conventional markets. They're dabbling back into Bitcoin, right? Bitcoin ETFs are a hot topic right now. And furthermore, we see basically the tightening of monetary policy. We saw Bitcoin's dominance decrease, as well as we've seen basically the price of Bitcoin fall down from 67K. All right, now we are basically halfway home at 30K, a little bit down from that, but it's still something to note as Bitcoin is still considering up since the bull market in 2021. Okay, but people that are in Bitcoin, they're not in it for the short haul. They may be trading, swing trading, bot trading Bitcoin. However, they are in it because they believe in Bitcoin, the technology, and what it has for the future of digital assets, because they believe it is the future of digital assets in itself. Okay, so I kind of have some varying, kind of in the middle, glass half full kind of comments on that regard. But furthermore, what we've seen basically 52% in the last 2 years, the market cap has been Bitcoin. So that is essentially 1.18 trillion. So 52% of that market cap has been just solely Bitcoin. So that's something not to balk at. But now, furthermore, when we've seen the dominance fall in 2020 and 2021, that was before the bull market, right? So you've seen more altcoins enter the fold. You've seen more meme tokens and people just dabbling into projects, right? So that takes some of the total market capitalization away from those cryptos. Similarly, what we've seen recently with Pepe coin and some of those meme coins where we've seen them take some of the dominance factor away from the likes of Shiba Inu and Dogecoin. All right, so that's something where we've seen major moves despite price rising due to just people getting into crypto, right? And we all know how it all kind of feeds. And Ethereum, conversely, works with some of the gas features and how that kind of goes back around full circle. In Bitcoin, not so much, right? So that's something where it's going to be evident where we've seen Bitcoin more of a payment processing and more of the likes of XRP in that regard when we look at how Bitcoin will make its way in being just basically adopted worldwide. So that's kind of what we've seen, and these cycles are something that is seen in traditional markets as well. Crypto is cyclical. We're starting to see that there's more historical data that is compiling more accurate forecasts. That's something where TA becomes more and more reliant on historical data. So those data points are something that we cannot ignore because what we've seen is Bitcoin furthermore create its own niche. Okay, and that's something where we've seen, despite the regulation from the SEC harboring down on some of these securities, Cardano, Solana, Matic, BNB, it continues their assault on crypto, but Bitcoin has been left unfazed, all right? And that's something where, you kind of have, Brian Armstrong says it best, CEO of Coinbase, that basically everything else other than Bitcoin is a security. So the SEC needs to be more clear in that regard, but the sector is growing. All right. And that's something that cannot be ignored. It just certainly the liability right now within crypto is in the macro space. All right. And that's something where monetary policy, inflation, regulation, adoption, and just kind of how the United States is handling crypto is what's left to be determined, right? I think financial institutions, some of the bigger players in the game, they're positioning themselves very, very strongly to kind of adopt Bitcoin, adopt these cross-border payments, transactionally, blockchain, Web3, getting into layer 2. I think that's what you're seeing with digital assets and the technology that lies within blockchain is Bitcoin is going to be the one that they are positioned, right? And we've seen this with the Bitcoin ETFs rising, so on and so forth. So it's going to be a fascinating ride. We are in a bear market, and I guarantee you guys it is true with everything else in anything investing with securities, crypto, digital assets, what have you. Real estate does not matter. Bear markets do not last forever. So that's what I got for you in this video. I hope you are all doing well. Please consider subscribing on your way out if you're new to the channel, but I appreciate you stopping by, and we'll see you all in the next video. Thanks, guys.